Hi there. Let me show you an interesting investment. As you can see, this company has a PE ratio about 4 and the dividend yield is almost 19%. So this is quite amazing. And you can also see the stock price. It keeps growing. An increase over 200% in just 4 years. This is amazing. Now, you might wonder if those earnings are real, if they will continue to grow more in the future. Well, if you look at this business, what they're doing, as you can see, this company is a oil producer. And by the way, this is not my investment idea. I heard of this company from a viewer that asked me, what do you think of PBR? So I said, I'll take a look and let you know. And of course, if you have other investment ideas, like this one, a PE ratio about 4 and a huge dividend, about 19%, let me know in the comments and I'll do an analysis about the company. Maybe we can find more undervalued companies, like this. So, if you look at this company, at the results, the latest results, you can see that the revenue for 2023 was over 100 billion. You can see that US dollars, million. So the revenue was over 102 billion. Now, this is the revenue. What matters is their earnings, their profits. And as you can see, their net income attributable to shareholders was about 27 billion in 2023. 27 billion. Be aware of this number. And now the market cap is around 100 billion. So that's why the PE ratio is about 4. And they are paying a huge dividend, almost 19%. Because they have a lot of profits. And you can compare their numbers. In 2022, they made 34 billion in net income. So this is an amazing business. You can also look at their free cash flow. For 2023, they made 41 billion in dollars, and 2022, 40 billion in dollars. And as I said, as the market cap is only 100 billion, it's like in about 2 years or 3 years, you can double your money easily and still get some dividends. Now, you also have to ask the question, how do they make money? As I said at the beginning, this is a oil producer. And the price, the revenue depends on the price of Brent crude, the price of oil. As you can see here, the price of oil, Brent crude, was about $82 in 2023. And they were able to make about 102 billion in revenue. And in 2022, the price was about $101. And of course, they also have the prices for their domestic market, which are higher. So, you have to follow the price of oil, Brent crude. And as you can see in 2023, the price, the average was about $80 per barrel. And in 2022, the price was higher, about 109, about that level. So, as you can see, if you look closer at this chart, you can see that in 2024, the price of oil has increased from 78 to 90 and down to 86. And compare this price with 2023, you can see that is almost about the same. 2023, the price was even lower, about 77, and then it went up to 90 and then down at the end of 2023, about 82. So as the price in 2024, as you can see here, got higher, this company will be able to make another 27 billion in earnings, or about that number. So based on this price of oil per barrel, this company is likely to produce more money in the future. to deliver about 20 billion in earnings. So that may happen. So when you think about this company, their huge earnings, and the price stays up about $86 per barrel, as you can see here, 82 in 2023, this company may deliver another 20 billion in 2024. And that means this PE ratio may be about the same, and this company may pay this huge dividend, about 19%. So if they make 20 billion earnings, the price to earnings may be around 5. And it seems quite a bargain, this company. Now, of course, you also have to look at the risk. If the price of oil declines, let's say to $40, as it happened in 2020, then the price of this company will go down, as it happened in 2020, down to almost $5. So from the current level, $15 per share, it might go down to $50. So you can have a decline more than 50% if the price of oil declines. So when you invest in this company, you also invest in oil. You try to predict its future, if you can. Now, because there is high demand for oil, because of war and other problems, this price may stay high for a longer period. And this company may continue to deliver those high earnings, over 20 billion in earnings. And you might get a nice dividend, about 18%. But this is not all. The price of oil is not the only risk if it goes down. There are other risks. The second important risk, of course, as you probably know, this company, Petrobras, is from Brazil. And a big part of the revenue comes from Brazil. You can look here. Total domestic market for 2023, the revenue was about 76 billion, and total foreign market, the revenue was about 26 billion. So you can see that a huge portion of the revenue comes from the domestic market. And as the market cap is in dollars, 100 billion, you also have to be aware of their currency, the dollar to Brazilian real. And as you can see in the last 10 years, their currency has been declining. You can see this huge increase of 100% in the power of dollar. So if you do decide to invest in this company, you also have the risk of currency, that Brazilian real may decline more in the future. In the next 5 to 10 years, you can have another decline of 100%. So this is another risk you have to be aware. Not only about the oil price. And of course, that's why this company is so undervalued. Now, those might not be high risks. If oil declines more in the future, let's say to 60, and the currency keeps depreciating, maybe you can still make some money, a nice profit, if you buy at the right time, as it happened in 2020. Now, the third risk is that this company, Petrobras, is owned by the government, the Brazilian government. You can see here, if you read this article from Reuters, you can see that Petrobras is a state-run oil company. And the problem is the state got involved in their operations. And as you can see here, the government wants to shift the company's capital management strategy to prioritize investments over shareholder payouts. This means that this huge dividend may be cut in the future. As this company is owned by the government, they are the largest shareholder, then they dictate the rules. And you as a small investor can't do too much about their strategies, their operations. And if you continue to read more about this article, You can also see that Petrobras said it only pay a dividend about 3 billion to shareholders, while 44 billion more will be set aside in a fund for capital remuneration. Of course, the management tried to calm investors by saying the cash was set aside for investors and not investments, but without giving a timeline for any payouts. So this is a question mark. As Brazilian's government is the majority shareholder at Petrobras, then this is a huge problem. Because the president of Brazil, Lula, wants to use Petrobras to bolster Brazil's economy and create more jobs. That's great for people, but not great for shareholders, because your dividend may be reduced, and there are high chances, from 19% to only 3%, even though this company continues to make more profits in the future. If the government takes their earnings, their profits, and invests in other projects, then your future returns will be quite low, lower than expected. And by the way, this is not all. As I said, they made about 27 billion in 2023, but you also have to be aware of their debt. You can see that their gross debt is about 62 billion. Or better, you look at net debt, which is about 44 billion. So they also have huge debt. And as this company is owned by the government, the government is the largest shareholders, they control the company. And you can't do too much about that. That's why, in my opinion, the highest risk is that this company is owned by the government. Even though the price may decline a little and Brazilian real may decline compared to the dollar, this might not be a high risk if this company continues to make more profits in the future, but the problem is the government. If the government interferes with their operations, and this is likely because they are the major shareholder, then this company, their future profits will be affected. They might take that money and invest in new projects, which will deliver low returns. So you have to be aware of this investment. If you like it, this PE ratio about 4 and the dividend about 19, and its future outlook, then you can take advantage and invest at the current price. But also be aware that if oil prices decline, then also your investment might decline more than 50%. And by the way, if they announce that they will cut their dividend from 19% to, let's say, 5%, then also the stock price will decline by 50%. So you have to be aware of those risks. And if you have other questions or other investment ideas, please let me know in the comments.